Hello, everyone. This is Sam Wong from Finance Analytics Services Team LLC. Hope you had a great weekend. For those of you who have watched my video properly, was very happy about last week. Because the market, where I said, the market have to watch if any good news to drive the market, going up rather than keep going down as a corrective zone, and at a certain point can buy at a dip. So the market did have some good news, which was glad, but it wasn't part of the thing I would have known and be able to tell you. Otherwise, we all be rich. So at the time it wasn't, but we are in an ever-changing world. So just telling you what were the good news last week before I start to talk about the market directions. While we're looking at the coming week, and what are some of the stock that probably good for investment. Many analysts believe that the market was oversold. So one of the Shark Tank celebrities said the Chinese stock were too low, and he bought some. And he listed out he bought some Alibaba, Tencent. I don't know if any Baidu, but there was another one. There are few Chinese stock he bought. So he did it right. He actually did it exactly the day before Chinese government made the announcement. They're driving the Hong Kong, in particular the Hang Seng Index, Hong Kong stock market rebounding significantly. Second, the Russian and Ukraine were in talks last week about the war, so that was also considered as positive. Russia paid the interest in U.S. dollar, and U.S. has accepted it to avoid the Russian default. So that's another good news. Because originally, probably with the sanction going on, people don't probably think Putin will pay for it. So, but he did. So whether U.S. really got the money, still waiting for confirmation. But at least he said he paid for it. And then the other one, Fed has launched a quarter point basis point interest increase, which was kind of expected by Wall Street, and so it wasn't a surprise. It's not zero. Which is kind of odd, but it's not 0.5%. And he also talked about his beliefs and how Fed was going to control and watch and oversight monitor closer with the inflation. So hopefully, with what we gear into toward the directions, the inflation will start to slowing down and eventually come back up. So one of the missions that Fed have is really assurance of full employment and inflation rate 2%. So we're no near the 2% right now, obviously. So we'll see how or what's going to happen next to drive the inflation coming down. Then Chinese government also came out to back the Chinese stock market and economic growth, despite amid the COVID breakout that kind of shut down Shenzhen and Shanghai and some important cities. Biden and China also have kind of talk about Ukraine situation. Obviously, didn't reach any agreement on any kind, but at least they start talking, which is considered as positive as well. So with all this stuff to mix together, the market apparently feels strong last week with Nasdaq particularly. They gone back up 8.59% in a week, and you can see actually in the first day, which is Monday, it wasn't actually very good. The market was up in the morning, and then it actually gone back way down on Monday with Nasdaq, and also Dow Jones Industrial Average was also reacting the same way. It was rebound back to Monday, lower, and then actually and kind of go up and down on Tuesday. But then the good news coming up with all the thing together, really Wednesday. You actually can see Thursday, and really starting this Thursday at the deep this point, it started to move very strongly with a direction of going up. So really the last 2 days, even though the market has gone back up in a sense 4 days, really the last 2 days that was really momentumly strong after Fed have announced, Powell came up with the speech of the minutes and at quarter points, and Chinese government come out to talk about the economy and how we'll be supporting the stock market and also the big corporations really to ensure sustained economic growth. The next one, S&P 500, you can see same thing. All these three indexes basically run in the same direction this particular week, and Monday was actually up, and then in the morning they slip, and then it started to go up and down, and then and at the Wednesday, end of Wednesday, so on Thursday, it start picking up, and you keep going up higher, and in this case S&P 500 was up 6.2%, but Nasdaq, since it was mostly got beat up on the previous couple of weeks, were really strongly be rebound. So stock have struggled a year, concerned about Russian-Ukraine crisis, dipping a sell-off initially fueled by worry over higher bond yield with the Fed across the tighter monetary policy. So the S&P 500 was down 11.8 the week before this week, which actually likely have been rebounded 6%, as you know, the S&P 500. I mean, yeah. And coming on the heels of yet another 40-year high for consumer price index in February, which was also hot at 7.9 year, going up. Policy tightening, which is actually a result of the Fed adding a quarter point, which seems to be very well received in the market. Diplomatic talk between Russia and Ukraine. Joe market opened with intraday Dow Jones rose close to 400 points, which is what I just covered earlier. That at the morning was up, but then you pull it back out in the afternoon, and then you actually end up to be negative for the day. U.S. officers said China for military assistance and economic aid to Russia for its invasion. So that didn't help, right? Make the situation worse. Russia war was now moved closer to NATO nations, which is actually Tuesday, with the bombing of military base that killed at least 35 in western Ukraine. Alphabet, GOOGL, Amazon, AMZL were also 2% lower, while Facebook, FB, Bakudan trend as well, trending down as well. On Tuesday, Asia equity mostly trade lower. Hong Kong Hang Seng led losses with 4.9% slump. That's where you can see the index here. Hang Seng index was actually jumping down to the lowest point, really. At the Tuesday, they were down even hitting below 19,000. And for those who listened to my video last week, I say, well, I was looking at 19,000. Hopefully, will be rebounding for Hang Seng index because it was really low from the peak of 29,500. If you do the math calculation, like 30% down already beat up. Some analysts at that time in Hong Kong were looking at 16,000 or even worse. But then nobody really predicted until the news came out. So that actually skyrocketing and really hitting a very strong momentum and start to buy, you can see the market started people buying in the stocks to push it up. And so as a result, at the end of a week, Hang Seng index, instead of down 5%, it was actually up 6%. So the flip about 11% for a week up and down for Hang Seng index. So it was a very interesting week. And Apple also lower offers on Tuesday. At the time, given the worry about the amid of the shutdown of China, Foxconn wasn't able. Going to be one short of supply because the shutdown couldn't produce any more chips for Apple. The yield of the 10-year U.S. Treasury also slipped back 3.5 percentage point to 2.109%. Anyway, and then the oil price is also hit back a little higher. And API weekly crude oil stock increased by 3.8 million barrels for the week ended March 10. That compared with a bill of 2.8 million barrels reported by API for the previous week. The economists are expecting a draw about 1.9 million barrels. And then Saudi Aramco and China were in the top about buying oil in yuan dollars. Ted finds its footing, climb more to 3%. And so it's kind of flipped the other way, which is started at at the graph was showing you earlier, going back. It started to really reversing back after hitting a bad day Monday and Tuesday. Plateau here, it started to go back up. Stock surge after the Federal Reserve raised interest rate, which was widely expected, as it signaled more of the same at the future meeting. The Fed raised for the first time in more than 3 years, indicates 7 rate hikes for the year to bring inflation under control. Oil continued to fall on demand worries after several cities in China shut down. On Thursday, the U.S. future was set to open lower, given skepticism at the assumption behind the central bank guidance along the war in Ukraine escalation. Crude oil prices rebounded over $100. Number of American filed new claims for unemployment benefit fell last week. Report also indicated acceleration in manufacturing production last month and a sharp rebound in home building. That drove the market in positive territory in third day of climb up. Russia has also made a 111 million bond payment to avoid default. Dollar General jumped more than 4% as company hiked its quarterly dividend by 31% after reporting fourth quarter results that missed on both the top and bottom line. Tech, meanwhile, was the relative underperformer of the day as big tech trade mostly positive, led by Amazon, but weaknesses in Microsoft. FedEx revealed earnings per share of $4.59 on revenue of $23.6 billion. Analysts polled by Investing.com anticipate earnings per share of $4.68 on revenue of $23.4 billion. GameStop, however, dropped 7% after missing earning expectations. So even though Thursday the market overall was a strong day, GameStop wasn't doing that well after earnings announcement. The future and first hour trade were lower also on Friday, but then pullback came amid signs that Russia and Ukraine top store attack of Ukrainian city will escalate. Meanwhile, President Biden is slated to speak with Chinese counterpart Xi Jinping on Friday to discuss the ongoing conflict. The International Energy Agency announced a 10-point plan to cut oil demand amid the supply shock from Russia's war with Ukraine, which is something I don't think it will happen, like car-free Sunday. That means tell people not to go out, I think. Work from home, I'm not sure, because the economy recovery and reopen actually, a lot of companies encourage pushing people going back to work so that, like restaurant and things will have more customers. So I'm not sure the plan makes sense, to be honest. Which actually, regardless of these stuff I just told you, Friday the market still have the strong momentum, so keep pushing things higher. Meta platform led to pick up more than 4%, which I will probably cover here, the Facebook in here. You can see the graph, and also Alphabet and Microsoft also were up more than 1%. Chip stock were also in upward supporting by more than 6% gain in NVIDIA. NVDA symbol as a chipmaker explained its rally for a fourth straight day. So for the week to wrap up, the S&P surged 6.2%, Nasdaq at 8.4%, with both making their best weekly gain since November 2020. Gold slipped 1.2% to 1920.3 per ounce. The 10-year yield was down 4 basis points to 2.15%, which is still I consider a little higher, but not that bad. Bitcoin inched 2.39% higher to 41,822. Right now, currently is on the weekend. Right now is hitting 42,000. Oil prices settled higher, but posted a second straight weekly loss after a volatile trading week with no easy replacement for Russian barrel in the tight market. Brent crude futures settled up at 1.2% at 107.93 a barrel a day after surging nearly 9%. In this video, I just cover up what happened for the week, but some of my friends actually emailed me and asked me to see if I can recommend some stock to buy. I should lay out a list. And I believe I've always been doing this throughout my past videos, and I've been very consistent with my pick. So I'm just gonna give you, my first 10 pick that I think it will be good. And some of these I do want to remind you that you can't just think about day trade mentality, which means if I tell you to buy it tomorrow and you just go ahead right away profit from it. Maybe Monday the market actually will slip back because what's going on with the Russian, Ukraine, or Chinese market, right? Or the outbreak of COVID in Hong Kong. But just give it an idea, I want to give you a couple of example. During the pandemic, if you go back way back on my video, I did talk about buying OXY Aussie. So if you hear the recent news, Warren Buffett also saying this is a great start. So they're buying it, they're chipping in to push Aussie in even higher positions. So during pandemic, it was as low as $9 this stock. This stock actually was from $80. I couldn't remember what was the reason driving the $80 crash, but part of it is also oil price were tanking to like really low, like years low, like $40-some. So giving that at that point at that time really giving a lot of trouble for a lot of energy company. like Shell, BP, Chevron, Exxon. Their stock at that point was really going way down. Okay. So in 2020, if you look it up in March, if you want to buy it, you buy it around the range. It doesn't matter, still around $15, or even at one point you were going back up to $20 in OXY. Then obviously you gone back to a time oil price still depressing, but then you start rebounding in this year. As you know, a lot of stock were giving at least 35% to potentially 75% return if you buy the oil stock, or if you buy the oil contracts. So Aussie was from $10. Let's say you get a $20. Now it's $56. And I go back to look at my timeline. In this case, Aussie, it wasn't very far time. I look it up to buy it until this point. You probably actually a whole year and a half. Different year and a half has up and down, but you actually have made it at least double for this stock, which is at least 200% return. Okay, you may say it's an exception because during pandemic, some stock actually gone to 5 times, 10 times, right? Which just give you an idea. And then the other one was MGM as well. I went back to look at it back then in 2020 July timeline. Actually, July timeline, it was only trading about $18. So now today, if you look up, it's trading $43. So that's another double, right? So the moral of the story again is that it has to be somehow some stock you have to hold longer. So for these one I'm giving you, if you making profit maybe 20%, yes, you can walk, but I'm looking at actually long term you will be probably doing a lot better than that. Like Apple, for example, it have been pretty consistent. I mean, it really hit the 3 trillion mark, which is $183, and then started to pull back really badly. And at that time, they were really gone down to 150-ish, last year look at. But they have been very, out of all the stock, if you compare with it, Apple is very resilient. I mean, it's really staying very strong between $150 to $160. Obviously, this stock may have to look for a long time till the Apple car going to come up. Another new iPhone they're going to be, have a new technological breakthrough that have a lot of sales and very strong, or the cloud business continue to be mature and give them a lot of great profit. So it may hit $200, but again, if this one won't give you a lot of return for just a short time that you compare to other stock, I can tell you, but this one will be much more, I would say, much more consistent and more safe haven in a sense. If you hold it and if it's dropped, don't worry, you probably buy it back. The other one is Meta Platform. I went back to look at this one, and for those who listened to the video before, if you would have held it a year before and you bought it and then you hold for a year, obviously not this month, right? This timeline, you actually will have made 70% return. And remember, that was already after the stimulus and push money on that, the year 2020 that I'm talking about. You really they have a disappointed earning and drop the price down, and then I think you was here back about 230, which was still higher than this moment, and then you push all the way to 300 plus 350. So just to give you an idea, now if you bought it around last week, right, which you actually have 180, I believe. Now even your 215, it was rebound quite a bit. You can check about 5 days. You should have rebound about 13%. You're still a pretty good buy from a long-term perspective. I'm actually looking forward and still betting on this one and see next year. By the same time of next year, would this be double again to hit $400, which means you actually hit over the 52-week mark. What happened though is if you're monitoring Facebook in the past, now metaverse, it actually have beat. If you look at the point, you compare the 52-week high, well, when the time is surging it, you always hit higher than 52-week high from the last 3 years, okay? Next, Microsoft. Well, why do I want to buy Microsoft? I had just a friend call me and say, hey, I have all this file, Microsoft Word file. I need to find my job and I need my resume. Well, but my computer, suddenly I can't open up the file anymore. You say some sort of Microsoft expire or whatever. I don't know what happened. So what they're telling you is, this product is not something we can leave it behind. I know Apple trying to create, make a Macintosh of their own and trying to be, better and create better and basically have the same applications that Microsoft Word, Excel, and PowerPoint, but it's just not ever able to make it. They are really in a monolithic environment that a lot of companies and even people who apply for a job really need, Microsoft Word. So to buy their license, I went outside and looked at it. You actually pay about $100 a person. Now it's cheaper. It used to be like $250, but anyway, it's get cheaper, but you still have to buy it. And there are a lot of computer. If you buy a new computer, you already install a Microsoft license because they pay for it already, right? So something to think about. I know this stock have been crazy. I mean, years ago they have a really rough time. The stock had dropped to $30, so that's why 10 years comparison from a $30 to $300 a 10 times gain. But if you bought it around this level right now, maybe even lower, let's say that. But on the long run, I mean, this stock will continue to grow because Microsoft is just a monster. Think about it. I mean, people really relying on this unless if there's another substitute that also have a lot of users, right? So that's another one. And they are very resilient. They were dropping. I mean, they have huge drop in the last week, but they now rebound back over, slightly over $300 again. If the momentum continue, well, you will well likely going back another 10%, we're back to $330. Then they are very close to, to 52-week high again, right? The next one, robots. I'm still thinking, my niece and nephew spend heck a lot of time on this. I mean, they still spend a lot of time. There's a lot of people who still really play and really create a lot of games into the robot space. This stock, I personally think, just like Minecraft, you will also last for a few more years. Even people still play Minecraft these days. Maybe the Microsoft or some other company will buy them out. So then, regardless, I mean, it will be good, right? Because if they buy them out, they can probably buy it at $100 rather than $50. And I really think, worst case scenario, if the market continue to improve, the next few days the momentum going to pick up, and then the stock should have gone back a 50% discount, which is $70. So if you were bought at $50 at this stage, which I'm not telling you to buy, you're going to be smart, intelligent about it. I bought a lot of these back not at $36 that bad, but at $42. So if you're relatively speaking, 42, you're up to $50. I still make pretty good profit, right? So think about it in just a week, because the stock at $36 was just happening 3 days ago. So something to think about. This stock may have a little bit of volatility, but and they actually still operate at a loss in last quarter and with some disappointment. But I truly believe this stock will still continue to grow with more users, and it will hit back. Hopefully, $70 to $100, right? Because last year they had same thing. They had experienced one time that they announced earnings disappointing. It dropped quite a bit to $70, just 70, I think 76 really. $70 for the IPO price first day ending day, and the price 76 was pretty darn close. Well, from that they push it up with the momentum, and you hit back to over $105, while other stock will still get the macroeconomic factors worry and the high interest rate pressure. So something to think about. The next one is, I have been talking about this thing since pandemic. Is these cruise stock and airline stock. So if you don't buy CCL, you can look at the NCLH, or you can look at the Royal Caribbean. Okay, but it's the same basically same industry, right? And if you look, like I said, I want to look at the 5-year chart just to show you that in the pre-pandemic, right, 2019, end of 2019 is where the pandemic really started. So if you go back, you think about it here, they stock $80, $70, $80. I'm not lying to you. So if this stock, just to think about, once the economy reopen again, everybody enjoy the summer and going out with cruise, you will actually, I think you will hit back $40 easy, right? It's really, really, I mean, 20, that's double. But someday, 2 years looking from ahead, when pandemic over, everything's go to normal, people enjoy their life again, I think this stock will hit $60, right? So something to think about, but it's a long-term investment again. They last week when the market was talking about war going on and things were not looking good, they are actually testing their new low at $16 to stop there. So just to give you an idea, the range is 16. If you drop again, the market go back, maybe 16 is the, or maybe you can get dip below 15 to consider buying. But in the long run, I'm still looking at $40 a stock, a share. Next one, United Airlines, same kind of deal, before pandemic, wow, $90. Sure, after pandemic, look at that, boom. But now they recover in a recovery phase. I know a lot of people talk about surging aviation prices are concerned, but honestly, they will have a strategical way to make them more profitable. They'll find a way to fill the plane more effectively rather than having empty seat. Okay. They also they actually do have hedging program. So a lot of people don't know that. They do go to buy future contract to lock down to the fuel prices. So something people didn't know about. So if that were, again, if they were done it effectively, correctly, they lock down to the cost. They won't know where they're at. It's much more easy for forecasting of profitability. So United Airlines, if not right now 42, I really think they need to go back to $60. We'll see. I mean, obviously, if another pandemic wave come, which is B2 people concerned about, well, you may drop back to $30 below again. But I think I'm not worried about it. I'm just giving you a range. If it get lower, it'll be $30. I don't think it'll go back to $9 where it was in the very beginning of the pandemic when people were out of control, have no idea what to do, and really fear of that were causing life wherever, right? Causing so many people death. So from that point 30 and was telling you a range of 60, right? Which really great flexibility and have a very opportunity to move up. Again, some people will worry about the fuel costs adding increases will really flow their profitability off, but history telling you that even with a high oil price, they are still profitable as long as the people go travel, right? Next. Bowling, I've been talking about this stock during pandemic. It was dropping as low as $90, and if you look at 5-year range, it's actually 40s plus. Well, this company is a very specialized, highly technical company that cannot be easily be replaced. There are only few companies in the world that make jet, airplane, and also Bowling also have contract with government on defense items. So just to let you know that they actually signed, even during pandemic time now things are slow, they actually did sign some contracts to get more, building more jet. Of course, they have problem with the 737 before. So if these problems get resolved, they write off that on the balance sheet. That may be as a reserve. If things get better, they may revert back to the income statement. That helps. Also, they are still negotiating contract with China. So if they were able to sell more airplane to China, that will be a big plus to start. When this news comes and say confirm buying plane from selling plane to China, I think you will hit them back at least 10% more here, 225. This stock actually, if you look at it, the range was from $235 dropping to last week $175, which a $50 range of gain 20% there already, right? So if this is momentum continue to go up, and again, looking in the long run, when we step out of the pandemic, I really think this company you're looking forward. You've not going, not going back to $400, $500. Well, you give it them $250, $300. Now, one thing I do note about Bowling is that they are moving very slow. So they were like a turtle, don't move, and very slowly, few bucks that eat you up in a month. You would say the $25 gone already, or move up $25, vice versa. But they are not a fast-moving company. But when they do, they will move in pretty quick because of the news and announcement driven them, or when they announce earnings that better than what they forecast. Next one, this is really my favorite stock, one of my favorite stock, not the most favorite, but probably second, third best out of my list. Although I'm not making money right now, I gotta tell you that. But HYLN, this stock have gone down to $333 if you have taken advantage of it from last week or so. But then after their earnings announcement come out, they actually have revenue. Woo! Finally have revenue, which is awesome. And then they also announcing not long ago having another 50,000 some call or something contract that actually lift them up. I really think 2025 or 2024, when the green energy, propaganda really launching into a much larger scale, this stock will have hit back. That again, this stock, if you look at 5 years, they were raising the money through SPAC. A lot of stuff through SPAC really got killed and really got slaughtered, really bad. So this stock is the same, $52 get under $3. You do your math, right? But let's say from $3 now, you can't start moving back up. I mean, let's say they already hit the worst case scenario, right? They're only going to get better and it's closer. I really hope this stock will go back to $10 above, So you never know, man. For these small stock, if one day they rocket, you could have gone to $20, which is, 4 times more than where it is. But again, this one, you have to be patient. You have to look for long run. That your date to looking at this, if not 2025, will be 2023, end of 2023. That's how I projected it. Okay. Next one. Well, for those of you who know, I'm a big favorite of Chinese stock, but Chinese stock have lately been hammered. It went back up a little bit, have improvement pushing back, then you get hammered again with delisting possibility, right? So the stock actually, this stock, the reason I put this one is something to be more speculative if compared to the other stock that may be better off other Chinese stock, because it's from $130 high end, drop all the way to $20, actually even lower than that, $15 when it was before Chinese government decided to say, I'm going to rescue and save the stock market and then continue to sustain economic growth. That was like the institution investor just keep dumping their stock. And I thought it was hitting $30-some, really low enough from a perspective that was from $80 keep going all the way down. Well, not enough. But now the recent announcement, he pushed back just like that. You look at it, it was way up for this week because it was just beat up so badly from $15 getting back to $27. So I still think this stock, from a long-term speculative perspective, if they're not delisting, they will probably potential move back up, let's say $50, right? Then you get $100, 100% return, then you probably should walk with this one. Along with this one, I really like PDD Pinduoduo. I bought a lot. And you know that was $212 was the high end. It dropped all the way, you wouldn't believe it, before the Chinese government said that it really flowed up to $22, $23 range, I think. So it was so ridiculous that all the Chinese stock all of a sudden the 90% value loss from compared to the peak time, right? So Pinduoduo actually dry back after that from $20-some push all the way back to $45. So you would have bought that and you knew that information, which I don't, you would have made 100% return already in 3 days. So Chinese stock in particular is very sensitive, very speculative. So you have to be very careful. You have to take a higher risk. But again, higher the risk, the higher the return. So some sort of timing may be important in somewhat. In this stock, Bilibili and Pinduoduo I just described to you. But also you can look at Alibaba and Tencent and BID or Baidu. So I'll give you 5 Chinese stock. Then you can make a choice, or maybe you buy 5 of them equally, but not a lot, and hopefully we'll wave it out with a return 20%, because some may be actually not working. Some of them will be just like that one we give you 100% return. So weighted average of it, it give you 20% return, which is not bad. Next one, I don't have anything else. I think these are already given you enough. I have given up 15 stock out there. That actually will be enough for your portfolio, because the best case scenario, a lot of time when you build a portfolio, you only want to have about less than 10 stocks, so you can manage it as a retail investor. So hopefully the market will continue to be up tomorrow. Right now, I saw the news from Russia just hitting the button of a hydraulic missiles. So hopefully that's not scare people, but and even the market actually going down tomorrow Monday. But other than that, I hope Chinese will continue to show strength, and also the pandemic in Hong Kong actually get control. Or if not, eventually, a couple more weeks will be over, and then Shenzhen and Shanghai will also reopen, and the number of cases also get control. And then hopefully this war will be over soon, and people digest the information about Fed and inflation, and will adjust. There will be more jobs created with higher pay in the office setting, so people can take those jobs, and then they have more money to spend, and then hopefully the world peace, things will get better for everybody. And we suffered for 2 years plus for during the pandemic, and hopefully we will eventually work out from there and be a better life. Thank you.